On March 9th, I went on camera and I told you exactly where this market was going. I said SPY was headed to 682. The market hit 682. I said it was going to drop from there, and it dropped. In that same video, I gave you the downside number of 666 and some, and the market went there too. Both levels called in advance, same video. Now here's what I want to show you today. Pay attention to Exhibit A, the SPY on the 1 hour time frame. Now, because most people watched that 15-point move happen and they did absolutely nothing with it, today I'm going to walk you through a step-by-step how to turn this exact move into a 10x return. That's right, the setup, the read, the execution, all of it. And then I'm going to show you what's setting up right now, because the next move is already forming. And this is a move you guys don't want to miss. You understand? Let's get to it. All right, now, right in front of you, I want you to see, right on the hour time frame, okay? 685. Let's find the number, okay? 685, right around here, right around this area, right? We rejected from this area as we predicted. And now we have downside price. Pressure went up again, right? That's what happens in a bear market, in a very volatile market. We have this downtrend here, okay? We have a downtrend right here on our charts, okay? Very clear to see that we have a downtrend. And we have 3 minutes before the market closes. All right, now the time of this recording is obviously minutes before the market close on Friday the 13th. All right, it's OPEX Friday. Next week is going to be interesting. We also have a fear and greed index sitting right here at extreme fear and around the 20 mark. Sometimes this presents a contrarian view where the market rallies. We have rallies into resistance and then we reject again. That same scenario played out over this past week, and I proved that to you guys with the videos that I release. That's why this channel is important. I bring you value, and in return you guys watch. That's why I'm going to continue to do this. Just this video here 11 days ago, I spoke about the monthly trading signal for SPY, and that 685 was a really number to watch in order to see if we could continue towards the upside or the downside. And we got that decision, and we've been following ever since. And I updated you guys 3 days ago right here with this very video about a trade setup, and it was the biggest pattern to watch, and that pattern is unfolding right now on the SPY, which is what we see sitting here at 662. Now here's my thought process. There are going to be some people who are going to be chasing. I do see us falling a little bit more, right? We have a couple minutes left. However, if this is a true demand, even if we stop here and we're able to rally back towards the upside, all right, I do see us retesting these highs to maybe try to get back towards these lows again, because remember, we are in a bear market and you've seen the way these moves can go. So we cannot assume that the move is over. But if we get that extension, we get a bounce back. All right, the bears try again, and we get right down here in our parallel channel. All right, I want to try to buy those 650, 660 if this isn't a bottom, because we could rally here. We could rally the same way we rallied here, but we want to see a technical pattern, right? Remember, we always talk about a 2-try failure. Let the bears try once, let them try twice. All right, they failed to take prices lower here. Okay, that's a lot of liquidity sitting up here, right? And we spring back, slingshot reversal. Now we could possibly get the same thing here, but we got to let the pattern unfold. And I'm telling you guys right now, what usually happens is the banks come in and they are ahead, and the retail traders, they're doing the opposite. They're doing the opposite, and I don't want you guys to be a part of that crew. All right, so I got this chart up. The 682 was your resistance. You with me? All right. And that was actually right here, okay, on March 10th, because remember, we gave a signal here, all right? Our signal was for us to go long, and then we said that we didn't want to just assume that we would continue if we hit 682. We talked about this. We talked about it, and we rejected that 682. We went a little bit higher to 683, but as you can see, we got that move. Guys, all it did was went up and retest these highs, created a higher low, a lower high, excuse me. This price movement here created a lower high because this price is lower than this one, and we continue down. This is a very powerful pattern, all right? And the market just closed, and as you can see, we closed at 662. We are below previous close, and so like I said earlier, you want to watch for these technical patterns: 2-try failures, 2-legged pullbacks, V bottom reversals. Okay, guys, we've been here before. This isn't anything really new. Right now, you see what happened. All right, now I want you to pay attention to something. There was a 15-point move, all right? 15-point move that happened. clearly. So from 682 all the way to 660, right? That's actually a 20-point move almost, all right? So that's a very big move. And what's going to happen is, because we have this fear and greed index here, all right? Now, extreme fear is a buying opportunity for those who think contrarian, all right? And the CFT, all right, the CFTC report, the commitment of traders, these are the commercials, right? When you hear traders or anybody on YouTube, any of your friends on Forex, or anybody that says the word institutional or footprints or smart money, right, or the supply and demand, they're referring to the way that the banks move. That's what they're referring to, the way that the banks move. And some people know how to extract this data, right? They know how to extract that data and look at the chart and can tell the human behavior of a chart. We have pendulum swings. We have ranges above us. We have ranges below, right? We are now underneath the belly of these ranges from previous weeks, and we can never get above it. We've been rejecting ever since, and we have this downtrend. Now what happens is that somebody's going to chase and possibly be on the wrong side. I would not be surprised next week if we get some sort of rally early in the week. Not saying we can't continue to go down, guys. I want you to pay attention to the signal. It's all about being patient and waiting for the best trade setup. And I want to bring that to your attention before we get to the credit markets, because the credit markets is what really pushes price. And what's the reason? One of the reasons why we've been going down is because of a credit crisis. Excuse me, guys. All right. And so I want to show you what I mean by somebody could chase and we can see higher prices. All right. Now, think about this. The banks have bought. They've reduced, and they reduced the shorts. All right. The banks have done that. They reduced the longs. They reduced the shorts. That's what they did. And right now, I think there's some short covering going on. There's some short covering going on while retail traders are trapped. All right. I seen the data. Now, you don't want to assume because of that data that we could just go up. Now, we could V bottom. We could very well much so V bottom from here. Okay. All right. Retrace a little bit, pull up, breakout, pullback, and continue higher here. All right. Right here to 680, 689. This is the optimal trade scenario. The same way I gave it here with you guys here. All right. Same thing. Same thing. We eventually got to that 682. And I'm telling you that this could possibly happen next week. But you want to enter in on this position at the right time. And let me show you what I mean by that. Now I'm going to pull the screen over a little bit, and you see the 1 hour time frame we're working with. All right. Now, just like this W shape and just like this V bottom here on the left side, price is here now, right? We retested this demand level, but this parallel channel says that we might have a little more to go, right? Just a little more to go, right? To drain the swamp, get the retail traders out here. So if we follow and do this move here, right? Let's say we go back like we did here. That's one scenario, all right? This is scenario one. Scenario one is that we have a relief rally back towards the upside to reject again by the Bollinger Band and our 21 EMA. These are our price indicators for rejection here. We just use these as a way to see price, right? But objectively, we understand the positioning of the market, of human behavior, the banks and retailers. That's what we really know. This is secondary when a price pattern tells you what already happened. And in my group, I try to prepare my students and the people who join to see the market beforehand. Yes, it exists. And if you want to join a thriving community that teaches you how to fish while you learn, then that link is down below. All right. We also have a book club, and we also have mentorship and one-on-one coaching for any of those people who are serious that want a learning curve. All right. Now back to the lesson. Now, if this is scenario one, what is scenario two? All right. Scenario two, okay, would be if price comes down from here. All right, we can do it here. Let's say price falls down next week and we get that move down. All right, we want to let the bearish try once. Okay. And let's remove this. All right, guys, smash that like button if you're enjoying so far. All right, now let's say we get this move here. All right, the technical pattern setup is letting the bearish try once. Let them try twice, right? No matter how ugly the W is. All right. Now I got them. All right. Now I got their stops. I got them trapped because they failed. All right. Failed rotation towards the downside. Right here at that neckline is where the stops are. Right. And we want to run those stops. We want to use those stops as fuel. That's right. We want to run those stops. use them as fuel for the upside, guys, okay? Because we know what the commitment is here, okay? Once they get trapped and we got them, it's a technical bear trap, and we want to try to ride. Now, where's the entry? Our entry, all right, let's say we have a candle, okay? Let's grab our drawing pattern, okay? This is a candle here, all right? Let's say that that one candle is right here, just like right here, okay? Just like right here, just like right there, all right? Just like this one candle here, okay? This is that one candle. And let's say the next candle comes and it opens higher. We already know that when price opens above a previous close, then the more likelihood of a price going up is more likely, okay? It's more likely. And so let's say this is the candle and price opens up above, all right? And we get a higher price, okay? All right, technically it's higher. Forgive the drawing, guys. All right, you can see the breach. You can see the breach of that wall, right? You can see the breach of that, and we are technically higher. That would be an entry, all right, on a momentum trade. Some people wait for what they call a break and retest, all right? So that means price, it breaks out, comes back, all right, breakout pullback, and then we take that trade here. This would be an entry, okay? Some people wait for that, right? Now, I like taking momentum trades if we can get that pattern, all right? Because understand that this is the first entry. This is the first entry. When you see that bullish engulfing of that next candle during the trading session and the volume comes in, yes, we absolutely take that trade, all right? And once we get here to that neckline here, this is where we want to maybe add to our winners. That's when the gamma meets pressure, all right? Somebody's trapped, we explode to the upside, okay? And then what happens, all right? Don't chase it if you miss these moves. First entry here, second add-on here as we break that open range breakout here, that neckline, but somebody's going to chase, they're going to miss it while we're taking profits, right? All right, and so that's when you get that pullback. That's right, human behavior. And you want to wait for the breakout pullback of that same zone we bursted out from, okay? And you want to add to your winner. That's right, add to your winner. So this is our second entry to add to our winner. If we're creating higher lows, right? Remember our structure, all right? Higher lows and lower highs, simple trend lines, guys. You learn this when you first learn trading. Trend lines, a downtrend and an uptrend, okay? You already understand that. All right, and so with that pattern right there, that's the entry you want to catch to add that leg and to ride the momentum towards these upside, all right? To ride back towards 671 and 672, all right? These are where prices can get to, all right? And if we get here and we squeeze, we knock out these orders here, all right? Let's clear off the screen, all right? We knock out those orders right above here. Right above this area here. Let me move this chart over. You guys can see a little bit better. All right. We knock out those orders here. All right. Just to take out some of these highs. All right. To revisit some of these liquidity pockets. Okay. And you can see price do that. It's the same scenario I gave you guys before. And so that's the signal you want to be waiting for on the SPY. All right. To reach these subjective levels here. Understanding what I just taught you. All right. Now, let's say we don't get that pattern that we talked about, all right? The double bottom, two trifarial W, right? What if we get a V bottom? All right, get down here, and before the market opens, we already start seeing the momentum here. And by the time it opens, we are just going towards the upside. Now, right here's that same point, all right? That same point. We either have a whole move, right? This entire move here, if we do go down to the bottom more, guys, this entire move will be 100% move here, right? If we rally, I want you to see the points of interest on where we could stop and have some trouble at to range right here. And of course, right around these areas here, okay? We V bottom, okay? You want to wait for a pullback on that V bottom because V bottom likes to go and grind sometimes, okay? And grind higher. Pull back, all right? And it grinds higher. This is the pattern, guys. You want to wait for that pullback to these previous zones. This is a V-bottom reversal and a grind. That's the pattern I wanted you to notice. All right, so these are the two scenarios. Hope you guys understand that for the SPY. Now, when it comes to the Qs, let's check out the Qs and see what's going on with that. That's right, the Qs are looking similar. All right, just a little bit more bearish than the SPY, I would say. And so the SPY is a little ahead of the Qs. We don't always get that scenario. But that seemed to be the issue here with the Qs. All right, same scenario, retesting some of these lows, but we haven't really retested those lows the way the SPY has on the 1 hour time frame. All right, so we can see a little bit more continuation before any relief. Remember, the banks have reduced longs and they're reduce some of the shorts, right? So more like a neutral position. So be wary next week on the Qs and on the SPY. Relief rallies, right? Not to say we overly bullish like a bull market is back, but a very aggressive automatic rally is what they call them, a very aggressive automatic rally. So you're going to wait for those scenarios that I gave you. All right, now let's check out the credit market. All right, and we're going to check out the bond market, and we're going to wrap this video up because I gave you guys enough for you to think about, to study and prepare for these same moves. All right, I encourage you to go and study some of these charts, study my videos if you're watching now, and realize I gave you proof of concept. You continue to see the growth and the predictions that I give away, not because I'm some grand scam of a guru, right? But I've been doing this so long that some of these things are going to be noticed with time and practice and exercise and experience, and that's what I give to you guys. So give yourself some grace, practice, go over these charts so you can start recognizing these patterns, guys. It's about pattern recognition. Now, what do we have with the credit markets? As you can see, we have downtrend, and we've been like this ever since a couple of weeks ago when the banks started positioning. SPY has been falling. We had the war that's going on with the United States, Iran and Israel, right? We have that going on, geopolitical risk. And we also have a credit crisis going on right now and a housing market issue that you're probably not aware of. And so we've been seeing this. And now, as long as this is down, the SPY cannot go up. This is part of the market eternals. That's right. The credit market is part of the market eternals. All right. And as long as that is down, SPY cannot go up. And so it looks like we are at extreme levels here. All right. And we could see some contrarian buying, guys. I'm just telling you. Now, what do we have here? Now, this is the bond market. The bond market has also been going down. Okay. Same with SPY. As this goes down, SPY is going to go down. We got to see strength in the bond market. It's been losing some steam here with the HYG. All right. So like I said, we could be seeing some sort of relief rallies. We have to get past some of these levels to reclaim. All right. We have resistance right here, the underbelly here for the HYG. We're going to need to reclaim 79.85 to see some strength. And right now we are below it. Of course, we are at some lows. If we can create a lower high, a higher low, higher prices than what you previously see on my screen for the HYG, for instance, reclaiming above the 21, we can see some sort of momentum. This will be one of your first indicators on a 1 hour time frame on HYG for us to see some upside for SPY for that relief rally we're talking about. Okay, guys, don't forget that. All right, and last but not least, let's check out the VIX. All right, let's check out this VIX. Have this VIX falling here. We fell a whole bunch. All right, gave it back, and now we are rallying towards the upside here. We're rallying towards the upside, and we might be falling off a little bit. All right, look like maybe a bear flag, but prices have subsided. And when the VIX falls, the SPY goes up. You want to understand that when the VIX falls, SPY goes up. This means that more people are buying calls, they're in fear, and more people are buying puts when it rises, and that's where you see those big drops in the SPY. We sensed then relief a little bit, right? Came back just to go back towards the upside a little bit more, and so that's the pressure you see. So you want to be careful around this 27-30 area. A lot of people start buying. All right, they kind of buy around these prices, and they buy the market. It's a contrarian view, so that's something that you want to think about. All right, now I'll be honest, that's what I have for you guys today. All right, this is the message for you. If you want to be ahead of the market, join the group. That link is below. Smash the like button and make sure that this video gets to other people. It might help. YouTube sees that as a way of pushing valuable videos. All right, I hope you guys enjoyed this video. That's how I would 10x my move. We got to catch that move. All right, you got to catch the same move that I'm telling you for the SPY. This is how you can 10x the next move, by catching a perfect pullback and understanding the contrarian view. All right, you guys remember these moves, right? The same way it happened here. We can get that move to the upside, and I want you to be a part of that. We can get that move, guys. I believe in you guys. Okay, this is Coach UV. This is the Unique Trading Group, where strategy meets mindset and discipline turns into income. And I'll see you guys in the next one. Peace.